Okay. Good morning, everyone. My name is Maggie Martinelli. I am the VP of Administration and Operations at the Scranton Area Community Foundation, and we just want to welcome you to today's webinar, and thank you so much for joining us. I would first like to give a big shout out and thanks to our friends at Geisinger who helped to make this opportunity possible. We're joined today by Crystal, who's going to tell us a little bit about, how we were able to make this connection and why this is an important issue for Geisinger.
Good morning. Thank you, Maggie. Good morning and welcome again, everyone. Thank you for your interest and participation this morning. I think it's important to mention that as we strive to make better health easier in all the communities where we serve, we recognize the importance our philanthropic partners, such as the Scranton Area Community Foundation and the Luzerne Foundation provide, and the role economic development plays in ensuring our population is happy, healthy, and thriving. Consequently, we are excited to partner with the Scranton Area Community Foundation, the Luzerne Foundation, and the DCED to bring this exclusive educational webinar to you today. So, the state's neighborhood assistance program in particular, that you're going to learn a lot more about in a minute, is a very unique program and something that we as a health system have been very fortunate to benefit from in making some investments in some communities that are considered a little more distressed than a typical community, and that those are some of the ideal investments for this type of program. And we're super excited again to bring this to you because it's such a wonderful tool. It's a syndicate tax program, pretty much, I think, a win-win-win for everybody involved, aimed at encouraging community investment into some of our most distressed areas. Again, it's a very innovative tool and a tremendous opportunity for area nonprofits and philanthropists alike interested in having an impact. Obviously, we are all, I think, in that same boat. We want to have an impact, a positive impact on our communities, again, so we can all live, work, play, and learn in a healthy environment. So we are just thrilled to partner. A special thanks to Laura, David, and especially Maggie for hosting and facilitating and collaborating with us and making this possible. We could not have done it without your partnership, and we look forward to many more investments in our communities, so especially Northeast communities. So thank you so much, and that's all I have.
Thank you, Crystal.
Thanks for joining, everyone.
Thank you so much for joining us, and thanks for bringing us this opportunity. We very much appreciate it. Dave Pedri is the newest executive director at the Luzerne Foundation. So welcome, Dave.
Hi, thank you for having me here today. My name is Dave Pedri. As our friend Maggie just said, I'm the new CEO president of the Luzerne Foundation. Been here about 2 months. So basically I found where my parking space is and how to get to my office every day. But just the amazing, what I've seen in my first 2 months of working here is the amazing reach of the Luzerne Foundation and the Scranton Area Foundation into our area not-for-profits. While both of us have locations in our name, Luzerne and Scranton, we're really northeastern Pennsylvania, and we're a whole conglomerate. And I've always said, in my previous job, I was the county manager for Luzerne County. I always said that northeastern Pennsylvania, if you look at us as an entire group, we're formidable. I truly believe that. You see that. The conglomeration here today of all of us coming together here. If there is an item that we can work together on in Luzerne County or northeastern Pennsylvania, we're always willing to be part of that. One thing I always said is about this program that I'm interested in is, it's very easy to have an idea. Everybody has an idea, like, oh, they should do this, they should fix that, they should do something else down there. But it's a whole nother world for the people who actually get it done, who get the permits, who make sure we have the tax credits, who make sure we have roadways. That's what really, where the rubber hits the road, and those are the people we need. And guys like Paul and the other people on this call are the people who make things happen, to actually make things happen and move the needle here. So I'm looking forward to it. I want to thank my friends at Scranton Foundation for your partnership and our continuing cooperation, and I look forward to the presentation.
Excellent. Thank you so much. Appreciate you being a partner with us and Geisinger on this opportunity. The Scranton Area Community Foundation is very much invested in building the capacity of our nonprofit community and to supporting the philanthropists in our area who are looking to do good within our region. And to that end, we have our Center for Community Leadership and Nonprofit Excellence to help our nonprofits better meet their missions through learning opportunities and opportunities to build their capacity to do good. So we are very excited to be able to offer this webinar to that end and have this opportunity for our nonprofits to learn a little bit more how they could leverage this tax credit program, and also how philanthropists in our community, business owners, also in particular, are able to leverage this opportunity. So I'd like to now introduce the man of the hour, Paul, who is with the state's Department of Economic Development, and he is our expert on the tax credit program, particularly the NAP program. And so we're absolutely thrilled to have him here today. I encourage you to please take advantage of having his ear this morning. So please feel free to enter questions into the Q&A, into the chat, whichever you're more comfortable with. I'll be keeping an eye on those, and we'll be taking those questions throughout. So please, take this opportunity to pick Paul's brain, and especially on this program, so that we can make sure that we're taking advantage of this program as a region, because it could pay very big dividends for a region as a whole, and for your nonprofits or for your business. So thank you so much, Paul, for being here today. We're very appreciative of your time.
Well, thank you so much, Maggie. I really appreciate that. And I'll have a little presentation here to share on a screen, but I wanted to take a moment to say thank you for doing this and putting this together, and Crystal for coordinating, and Dave for your support and participation. It's extremely important for this program to really expose it in a more robust way in our region. It's somewhat underutilized, and there's tremendous opportunity, and it's one program that we have bicameral and bipartisan support in the legislature. So it's when we would expect to see continued funding and increase in funding as we continue to do work that's really impactful. And I'll have some examples later on as we discuss some of the things that we've done. But I did get a chance to look through some of the names on here, and there are names of some folks that have used the program before. So it's great to see some of them here. Maybe could even offer some of their testimonies to how it can work and what's been very, very successful. So we'll talk a little bit about that. So I'm going to share my screen now. One thing I will say in advance about this program: it's not riveting. So it can be a little dry. It's a complex program. So I'm going to give you in as much detail as I can without really trying not to get too inundated with the nuance. Generally, what I recommend to people who are engaging in this, and it's pretty much a requirement, is it's going to be really hands-on with myself and my office and our program people in Harrisburg to make sure that your project is refined and consistent with the objectives. And my goal is to have anybody who's going to apply for a project to have a high probability of success before you have to go through the process, because it's not easy. It's not a grant program, and you'll start to see that as we go through some of the details. So I'm going to share my screen now. If you have questions along the way, I guess you can raise your hand, and Maggie's going to coordinate some of the questions as we go along. So feel free to throw them in the chat, and I can answer questions along the way at the end, however you want to do that. So with that, we were referring to the Neighborhood Assistance Program. And again, my name is Paul Macknosky. My office is in Pittston. My contact information is there. You can get me pretty much anytime. It rings to my cell phone, so you can always get me with any questions. That's a good contact information there. And let's see if we make this work now. Okay, there we go. So in a nutshell, what this program is a tax credit program that allows nonprofit organizations to get involved in projects that they are generally doing on their own as a normal course of business, and finding, as opposed to getting just a contribution from a business, that business then can leverage their contribution and get money back in the form of tax credits. So some of you may be familiar with the EITC, the Education Improvement Tax Credits that are out there. It's along those lines where the company will give a contribution and they'll get a percentage of that money back in credits to their taxes. And this is, it's designed to create these collaborations. So you as nonprofits generally that's your lifeline, right? You're out there, you're talking to businesses, you're having these discussions. This is a way to go and say, hey, we can really leverage and increase the amount with no additional costs, and in some cases, additional benefits beyond just the program itself. Tax credits, as they are, it's a pretty simple concept. It has to be a company, can't be an individual, but that tax liability can be offset by credits. So instead of giving a check at the end of the year, you can use some of your credits. It's not, the program itself doesn't offer the dollars, so we're not giving you money. What's going to happen is the company's going to commit to giving you money in return for those tax credits. There are specific criteria for what can be utilized as far as which taxes, and this is an example here of some of them. It's basically any for-profit business. So corporate net income tax, capital stock, bank and thrift trust, and also in pass-through corporations. So your subchapter S corporations. So in an instance where somebody's a sole proprietorship and they pass that money through under their personal income tax, because they will also file a business tax within their personal taxes, they're eligible as well. And we always have to put that little disclaimer down there. I'm not a tax advisor, so generally what I'll do when I'm dealing with businesses, and that's where the partnerships, sort of the synergies are created, I'll have a lot of interaction with the nonprofit on the program development side, but then on the processing and the the compliance and tax side, we'll have some degree of interaction, but I'm generally working with the businesses and recommending they have a conversation with their business, either their accountant, or in some cases, depending on the size of business, maybe their finance department within the organization. So whoever's doing their taxes or making those decisions will have those conversations so they understand how the program works on their end, because it's sort of a three-pronged approach that we're using with the relationships. So the components itself, and as I mentioned, there's a percentage. Okay, so in the world of the EITC, those of you that are familiar, you'd recognize right away it's a 90% credit. So if you give $1, you get 90 cents in credits. It's different for the neighborhood assistance program. It is something we are trying to rectify to make sure that it is competitive and that we don't have businesses that want to prioritize doing EITC over neighborhood assistance, because as far as we're concerned from the Commonwealth, they're both extremely valuable and useful, and we don't want one to be, sort of a priority over the other. We'd rather see, the opportunity to do it based on what you're giving the money for. And that's really a beautiful aspect of the tax credits in general, and it's specifically the neighborhood assistance program, is from a business contributor standpoint. Much like when you're giving money to a specific nonprofit, you're giving it to them with a purpose in mind. It's you want to support what they're doing. That's the beauty of this. You get to take tax dollars that otherwise would go into the general fund of the Commonwealth and bring them out and say, I want to put my tax money, a percentage of that, to a specific project. So in the world of this vernacular, if you will, of the neighborhood assistance program, you'll see the first one is the regular net tax credit, and it's to my chagrin that they decided to name one of the components of NAP. So it is the regular NAP tax credit at 55%, and we'll talk a little bit more about what distinguishes one from the other. But this is just to give you an understanding of how they work. The MPP tax credit is 75 to 80%, and that's a multi-year project. NAP is a single year project. So with an NPP, a neighborhood partnership program, it could be 5 to 7 years, and you get an increased credit for your contributions with those type of projects or programs. And the special programs priority tax credit is also, that's a 1 year, but it's a 75% credit. And again, we'll go into more detail about what each one is, what distinguishes one from the other, but it's really what the uses are and what it's being targeted to accomplish. And then we also have two other ones that are sort of on their own channel. The CFP is our food program. That's where we fund food banks. That's utilized quite a bit in our region, and the food banks that you're all aware of, I'm sure to some extent, have used it. I know CEO has, and Treehab in the Northeast, Northern Tier, and we do have, most of the food banks, I think all of them in our region, have utilized the CFP tax credit program in some ways. It's very productive for their specific uses. And then the other one, which we're really going to sort of gloss over a little bit because it's not relevant. This is the one private sector credit in this program is our EZP. And that's for businesses in designated areas, designated for our Main Street programs. They have the ability to get a 25% tax credit for their own work that they do on their businesses. So it's a little bit different. And really, I mean, if there's any particular instances where we have to discuss that, we could, but that's sort of a one-off. So we're going to really skip by that a little bit. And here's where the discussers, there are two sets of guidelines, the neighborhood of NAP guidelines and the EZP. We'll be focusing on the NAP. And this is critical, especially in this program, because the guidelines are very specific to this program. They are for all of our programs, and those of you who have had interaction with DCED, you're familiar, I'm sure, with the guidelines that we use as the basis for what we need to see in applications, how you apply, the timing. It's really the Bible, if you will, of each program, and in this case, extremely important. So I can make them available. So we have our current guidelines. They do change every year. There are different priorities and different things. So we do have new guidelines that come out every year, but the bulk of the programming elements are the same. So you'll always have the basic nuts and bolts of what you need to do. What we generally change is eligibility and focus. So just on the general side of eligible activities, and this is not a full list, this is just some of the things that we do work on, affordable housing and economic development, community services. And what you're going to start to see here is that there's two sort of places that the neighborhood assistance program can work. It can work in a specific project, a building, a downtown revitalization, or programming. So at-risk youth services, YMCA types, after school programs, things like that. So there's sort of two ways that you can utilize a project in this. And so that's really what we see in the eligible activities. Now we'll talk a little bit more about each one and give you a little bit of an example. And so affordable housing, there are criteria that are necessary for each element to fulfill the requirements within the program to be eligible. And in this case, it's our affordable housing has to serve low-income households. But we're not like CDBG where we have this is the criteria. We're gonna make an assessment internally based on some of that criteria. But we generally make a judgment and look at so it's not a hard and fast. This is the number for low income. We're looking at the area and the whole region that we're dealing with as we review the applications. And it talks a little bit about what you can do and what expenses you can use it for, and that's pretty straightforward there. So then we also have the community economic development elements, and this is more the project type work, streetscapes, upgrading parks, and I mean, there's a lot of things you can do to stabilize distressed areas, and that's what we're trying to do with this program. We're looking for areas that are underserved and maybe money doesn't flow into them as aggressively as it does for whatever reason. and we want to try and work in those areas to stabilize and create opportunity. So it can be commercial and industrial building rehab. We're looking to generate employment. Obviously, it's part of our stabilization and revitalization for areas. And the elimination of blight is also an important thing, and especially in some of our areas where we, in our old coal areas, we have a lot of blight, and it's a challenge that we face. And we need, we have organizations that are there and doing some work, but it's they don't have the tools necessary. This is another tool to really get into those places where you might have half the population we had 100 years ago, but the infrastructure is still there. So that blight removal is a very valuable way. And we actually have Todd Poosley is on from NeighborWorks, and I'd mentioned before that there are people who use it, and they are probably one of our very best organizations to use this. And they just received funding for a Beautiful Blocks program, which is exactly what we're talking about here: blight remediation and community revitalization. And then also increase access to job training, employment opportunities, things like that. Now on the community services side, so this is where we're moving away from the economic development and looking at programming. So counseling, food service, medical care, all those things, again, looking for underserved areas, either or in a distressed area, or a population that is underserved. So when we say a distressed area, that could be, a location, a borough, a township, a city that is in a distressed status, or it can be a group of people that are underserved. So we're looking at, demographic information and that socioeconomic information for a group of people that we can try and help and create programs to assist. And things like we have counseling and advice, mortgage foreclosure prevention. And again, NeighborWorks has been a leader in doing that here in our area. And then also educational elements are part of the eligibility. And you can have scholastic and scholarship assistance. So we can look again to provide those opportunities if one of the foundations or somebody like that is looking to give scholarships to a specific targeted area, we can create a program that would fit that need. So under the neighborhood assistance, and this goes back to that physical improvements. Okay, so we're looking at, okay, now what can we put into our project as we're doing it? Well, financial assistance is one, direct financial assistance, labor and materials, and then also technical advice. So if you, if somebody wanted, you can give in-kind contributions, but if you were giving services for a project or a program, and you generally would charge for it, you can then use that as a contribution into your organization, into this project, and we can fund that as well. So we're generally looking for, to address the issues of decline in the neighborhood. It's pretty straightforward. And then the needs of the vulnerable population. That goes back to talking about the area versus the population of people and what we're trying to accomplish. And then we would see that as the secondary result of that would be it's stabilizing that distressed area. So that's how we generally justify those things falling under that category. And then crime prevention is another one as well. Any activity that reduces in crime, camera systems, hardware, and also crime prevention materials, things like that you can use. So you're starting to get a feel for what you can do. And again, this is not a total list. Something that is not in here that I didn't update, and I do apologize, but I want to mention it because it is a priority right now. So we had in our current year funding cycle a priority of COVID-related issues and social justice issues. So if you came in with a project that was related to dealing with COVID in an underserved area, we were giving them priority and they were reviewed first, and we filled 100% of them as they were eligible before we moved on to any other projects. So it was that's an example of how we modify things over year and make small changes to the guidelines to deal with specific issues that may come up as we saw with COVID. And then job training is also another one. It's something that's relevant right now as we have and those of you that overlap into the economic development side, and even now, I mean, you're running nonprofits, you're probably having trouble getting people to come and volunteer and work. And we have a really difficult environment right now in the labor market. And this program can be utilized to offer vocational training to people that might not have an opportunity to get it normally, might have barriers, recently incarcerated individuals, things like that. You can also, put a project together to deal with those issues as well. Okay, so now on to the application. Again, those of you who are familiar with DCED and how they operate and their application process will be familiar with this. This is our single application. It's the single application because all of our programs flow through this system. However, it's made to be a one size fits all, but it's not adequate in and of itself. So what you'll see is when you're applying for the neighborhood assistance program, it's attachments and addendums to the application that you're really dealing with. So you're going to be doing the application outside the single app, and then you're going to be bringing it in with the information that we'll go through and talk a little bit more as we move through here. And this is really what I'm talking about. The crux and the base of your application for a neighborhood assistance program tax credit is we call the 4 Ps. And they're really, the whole purpose is to really give a foundational definition of the issues that we want to see addressed through this program. So the first is the place, pretty self-explanatory. Where are you doing the work? Is it, Luzerne County, Lackawanna County, the city of Scranton, the city of Wilkes-Barre, Honesdale, wherever it may be, you're going to define that place and give some information and where the project is. And this is where it can get a little bit complex based on what you're doing, because the place can be a broader, it can be a specific location, or it could be a broader area. But you always want to talk about the broader area in the context of the place that you're doing the project. The next is the problem. So what are we trying to address? Okay, is it blight? Is it homelessness? Is it crime prevention? Is it, whatever our eligible activities are, those things fall into place. Now, as you see place and problem, you think, okay, this is in Scranton and, it's blight. This is where you have to sort of think a little bit broader in the context of a place and a problem. The place can be, and the problem can deal with a group of people. So we can be talking about, educational attainment in a town where it's really a population that you're talking about as opposed to a specific place. Okay, and then what's the need? Next is the project. So now we're talking about, what is the project? How is it going to deal with the problem in that specific place? So when you're writing these, you want to tie in together the place, the problem, the project, and ultimately the proposed outcomes. So you're integrating all these things together and putting them in the form. And again, I'll sort of continue to stress the need to really understand the guidelines, because in the guidelines, there are specific questions about the place that they want you to answer, specific questions about the problem and the project that they want to answer, so that you're sort of touching on all the needs of the program requirements, but also on how this project is going to work and what it's going to ultimately do. And more specifically, to some extent, what the specific NEP dollars are going to do within the project. And then finally, the proposed outcomes is a specific quantitative measure. It's our impact measures report. You fill that out at the beginning of the application with your, and this is a sort of a one size fits all document. So there are quite a few parts of any applicant where you're going to skip a lot of it. If you're dealing with mortgage foreclosure prevention and they're asking you how many buildings have you renovated, obviously there's no relevance there, so you skip that. So again, part of the process that I work with you all, any applicant, I work on these little nuanced details and making sure that your application is strong and hits on all the key points we need. And then the next thing that's part of the application as the addendum and attachment is the budget. And this is going to include all sources of funding. So, you know, a lot of these projects you're using, this is a piece of the puzzle. We want to see the broader picture as well. So, so we can get an idea of what kind of leverage we're getting out, not only in the leverage from the tax credit itself, but also the additional leverage that we bring into a project. And then the budget justification, and there's an exhibit in the guidelines that you can see. And this is really reinforcing the specific use of the dollars and how they're going to be spent. And there's specific criteria in the budget justification that you'll need to really just hone in on when you're doing it. And there's one thing that's not in here I don't see, and it's a timeline. So you do need a project timeline as part of the application. As we go through a little bit more, I'm going to get into some of the nuance about the difference between the NAP and SPPs, and I'll talk a little bit more about the timing and timelines and how they work. So we also have a checklist in there, and these are the things that you specifically need to have. We do have the impact measures report. I mentioned that. The commitment letters are required for, this is where the business tells you up front, yes, we're willing to make a contribution, but only if you get approved. So basically what they're doing is they're saying yes, and again, there's a in the guidelines, there's a sample commitment letter, and I always tell people, I said, just specifically use the exact verbiage in that letter and just change the name of the business, because it's specific and concise and we know it works. So there's no reason to reinvent the wheel. You could just tell the business, take this, put it on your letterhead, put your name in and the amount, and you give them the salient details, and that's what they need to do. So that's required, or a solicitation plan we also allow. Our general timeline for this program has been opening in May. Hopefully we would open the application, actually open the application in March or April, with the closing of the applications by May. However, there's two components to this. You have your application and the project description and the 4 Ps, and then you also have your commitments of money. And we do allow a solicitation plan. So if the beginning of the year you want to raise $200,000 for a project, but you have to go out and talk to businesses, and by the time that May rolls around, you didn't get any actual commitment letters yet, or you only got a portion of them, you can put a solicitation plan in that describes exactly who you're going to ask for money and how much, and what your overall goals are for soliciting the commitments going forward. And we have the past few years allowed till at least the end of August and sometimes the end of September to get the final commitments. We've been moving more towards the May deadline for the application, August for the solicitation plan for the final commitment letters, so that we can get our approvals by the end of the year. We just had our approvals this week, or last week, I'm sorry. So you can see, and that was with the end of August for the commitment letter cutoff. So we're a few months later before we finally get our approvals. So applications beginning, in the springtime, commitment letters, end of the summer, hopefully approvals in November, the time frame. That's ideal. You do need to have an IRS determination letter, and actually that's being worked on right now. We are probably going to allow the 990 to be the IRS determination letter, because you're a nonprofit. So this is a thing that may be a little bit fluid and may change going forward. And if you're doing programming and you're paying staff, okay, you have to have the job description, sorry, for any staff and what they'll do and what their pay is. And then project cost estimates, any subcontractor agreements that may be part of it. And then, NPPs, as I'll talk a little bit as we go forward, the multi-year projects, they have some other additional requirements. They're in the NAP guidelines. If we're doing an NPP, we will have worked quite a bit together up to the application. So a lot of those nuanced details we would have discussed already. And the application is submitted by the nonprofit itself, and it has to be a nonprofit 501c3. If the project's approved, we get notification, get a notification letter. Then you have 60 days to sign it. We're in that process right now with all our nonprofits. They're getting it back to us. And then at that point, we send out a letter to all the contributors to let them know that they have, it's been approved and it's been accepted by the nonprofit. What I generally do is I'll call the nonprofit and say, you can tell your contributors that they can write you a check at their leisure, or if they want to wait until the letter comes, but you've already been approved. Those letters will come. And at that point in time, that company's writing you a check. So you're getting that money pretty quickly once the approval gets done. And then the final impact measures report, you're going to fill it out in the beginning. And then when the project is completed, which is December 1st, I don't know why that's 18 in there, the 31st of the following year, that is based on our timing of the program. And our timing of the program technically is July 1st. So that's when by the dates, the timing of our program, we would have expected to give you an approval by July 1st. It never happens. So while we want the community impact measures reports by December, we understand that you may have not completed a building project. If the building project was going to take 18 months to complete, or 15 months to complete, and we didn't give you approval until December, we're going to extend that timeline a little bit to let you finish the project. So there is some leeway there based on when we do the actual approvals, but generally you're going to have to at least give an update on your impact measures report in December of the following year. Okay, so now going back to those, specifics about the different sort of silos, if you will. The regular NAP is a 55% credit, and it's a one-year program. The eligibility is what defines whether it's an NAP or an SPP, what the actual project itself is. And some examples of when we did the welding program in Johnstown, they got $67,000 in contributions, 20-hour welding training, and 21 people graduated. And then, you could see some of the results. It was very successful, but that's an example of a job training program that they were able to fund using those credits. The neighborhood partnership program is a little bit more detailed, and it's a partnership. So you would need multiple organizations working together, or an organization working in an area where there are other organizations doing work to try and look for long-term, change to an area. And it has to be part of a strategic plan as well. So it's a 5-year commitment, a minimum. It could be up to 6 or 7 years. Generally, there's no minimum for contributions of our NAP or SPP. With the neighborhood partnership program, your contributors, they have to commit to a minimum of $50,000 per year for all the years. So they would have to commit for 5 years, $50,000 a year, and an NPP has to have at least $100,000 commitment each year. So you can either get one contributor at 100 or 2 at 50, but that's the minimum to even consider a neighborhood partnership program. It does require a committee that's looking at it. So usually organizations do this, and we do have an example locally that most of you are going to be familiar with. But you can see some of the other requirements here. I'm not going to go through all of them, but one thing that's important to understand is you can't add to this after your initial application is in. So if you're saying it's $100,000 a year, and in year 3 you have another contributor that says, hey, I'd like to get involved, you can't add in year 3. You'd have to stick through. But we can always do a separate parallel project if that instance did come up. And here's the example of a very successful NPP program that is, I believe, I want to say might be in year 5 right now. 4 or 5, and it's the South Side Elm Street and their revitalization efforts. And here's some work that was done utilizing the tax credits. They were able to secure this for multi-year commitments from local businesses to give them enough to do some pretty substantial work, and they continue to do work down there in Southside. And here's some of the results that you can take a look at, the work that they've been able to do. It's very impressive. Those of you that are familiar with the area, and I think most people on this call are, you've seen the work and the change that's happened down there. That's really ideal, and that's what we're looking to see with this program, is that transformative impact that can really change an area and put it on a new trajectory. So that's a multi-year, and that gets you the 75 to 80. This another single year option, and this is also our special program priority. And I would say, in my case, in the Northeast region, 75 or 80%, maybe even more, are special program priority projects. That we look to fill the niche of the eligible activities and what you're trying to accomplish under SPP, because it gives us that 75% credit, which is much more attractive to businesses than the regular NAP. So we always try and fit it if we can. But here are the current priorities as they exist. And the two initiatives that I didn't add to here, I mentioned before, COVID related and social justice, are not listed in here, but they're priorities under the special programs priority. So here's some of them, and I can go through all of them, but I do want to highlight one that was added a couple of years ago. That really opened up this opportunity into rural communities. The rural initiatives element under the SPP really just means that if you're in a rural area that's somewhat depressed, and it could even be a whole county. We basically are looking at almost all of Susquehanna County, for example, that's just generally eligible under the rural initiatives. So now you've really broadened it out where a project that may not have been eligible in an urban setting or a higher a wealth area, in an urban in a rural area is eligible now. So that's a great change that really has helped me, especially in the Northeast region, because I have a lot of rural areas that I work with. So and that could be in rural areas of Lackawanna County or Luzerne County, Schuylkill County. It doesn't matter. It's just that it's rural, and we define, there's a definition for how we look at that. And again, as I mentioned, 75% credit on the eligible contributions in a one-year project. So here's an Alice Pajos. This is a domestic violence shelter that was funded, and it was $225,000 in credits, leveraging $300,000 contribution. And they followed that up with another SPP the following year. We do that a lot on larger projects. You'll see one coming up here. That was a multi-year contribution. But this is a very successful project. So you can see some of the work being done there. And here's the one that we did in Minersville, and this is with our friends at Geisinger. They came in, and this was a solution to an issue that the developer had with making the project viable. He had he really wanted to do this work. It's his hometown, and he had the funding capacity, but they couldn't make it a viable economic development project. It was going to cost money, and nobody's in the business of losing money. When Geisinger came in, they took over the whole floor of the loft apartment and created and put one of their life facilities in there, and they have a whole floor that services the people, not only the people in the building, but people in the area as well. But it was an incredible partnership that allowed this project to move forward. And they got $1 million from a contributor over 2 years, $500,000 in two-year increments. And it made an injection into that project that gave it life and made it work. And I tell you, it's one of my favorite projects that I've been involved with, and it's a beautiful facility. And they really did great work. And they have low income and market rate housing combined in it. So it's a mix, and it's a really great project. An SPP project in our area that many of you may be familiar with. I'm sure if you're in Lackawanna County, you know Judge Borace has been running the treatment court for years. And he has different priorities, that they deal with veterans issues and all these things that they work on as people come through the court system. Well, on the back end, when you go through and you're sentenced to the treatment court, is a nonprofit that delivers those services. So we've been able to fund them for now, I believe we're on 6 years. And this number is not counting the year that we just approved this week. So it's over 270,000 in tax credits that they've been able to utilize to keep that treatment court up and running. And it's now being modeled in other areas around the state as well. We're hopeful that Susquehanna County, looks like finally we're going to be seeing some opportunities. They're doing a treatment court in Susquehanna County, and I've talked to all the counties trying to get them to look at something like this to take advantage of it in their communities. And the other piece of the puzzle here is the charitable food program. And look, you guys are in nonprofits right now. You know how it's tough, right? We have inflation that is really eating away at the buying power of everybody now, and COVID-related issues causing challenges in our supply chains, and it's been difficult. So this is money that really goes to great work and a lot of efforts that I'm sure you're all familiar with. CEO is who I mentioned before. They come into our program in this way under the CFP. But just as an example of how you can be creative and think outside of the box, they also have a NPP project, which is dealing with food insecurity. So not only bringing food to people, because we know people need it, they're now doing working on a study and working on research to try and identify ways to deal with the chronic issues of food insecurity. So they were able to get a contributor to give $100,000 a year for, I believe it's 6 years, and they're working through an NPP as a food bank, but not on their food bank operation. So really innovative and a great idea. Another one of my very favorite, and it's the first of its kind across the state, and it's been very successful thus far. And as I mentioned before, you can have in-kind contributions. So we're going to talk about the contributors here a little bit. It's not just cash, it could be in kind, it could be services. And so there are some criteria that you ultimately have to deal with when you're dealing with in kind so an in kind of your services or a building, for example. We've had business banks specifically in a couple of cases. They donate a property, and then we need a couple of valuations, separate valuations, and then that's how they use it for their credit purposes. And then a commitment letter and tax compliance. The tax compliance is online through the Department of Revenue. And basically all they just want to make sure is you're not delinquent on taxes, which I'm sure you can all understand, it makes sense. And then another element for contributors, and I'll do this, I have a lot of discussions in these projects when we're working through, and people are like, well, how do I do this? And how do I talk to the contributors? And I always tell them, I'm like, that's what I'm here for. If you're considering this and you need to start talking to businesses, you're going to have a hard time on this part of it because you don't have the depth of knowledge on how this stuff works. And your focus, we want your focus to be on that piece of the project itself and how it's going to impact people. So I'm always available to sit and have a discussion with any businesses to give them the nuance. And one of those nuances is these credits can be used over time. You can make a $100,000 contribution. You could use it all this year, or you could split it up in pieces for the next 6 years. And you could also sell them. So you can sell them in an arrangement with another organization or another business that might have a tax liability. And so if a business wants to give to your cause, but they don't have tax liability, and they can still get involved, or if they don't have a current year tax liability, and they can also assign them to another part of their company if they want it, or just another company in general. So once the approval comes through, there's an application for tax credit, or the seller assign the tax credits. That's done once the approval process that I discussed earlier takes place. And then provide proof of the contribution. They're just going to have it. Usually it's in the form of a check, wire transfers, things like that, depending on how you're doing it now. Some receipt that you're going to need anyway on both ends so that they can provide proof of the contribution. And then DCED will issue the tax credit certification forms. And we also notify the Department of Revenue. And then they have that list, and it's not perfect. There's always bumps in the road, but we're here to help. And the Department of Revenue is really good at understanding where we are and getting that information. And there's some communication that exists so that we all know what's eligible and what's out there. So there's no problems as your contributors make their, file their taxes. So that is the end of what I have right now, and I do have a little pop-up here. I see there are some questions, so at this point in time, I'd be happy to answer any specific questions and go from there.
Excellent. Paul, thank you so much. This is incredibly valuable information. Maybe I'm a nerd here, but I don't find this dry at all. It's really fascinating stuff. So thank you. We have a couple questions coming in. The first one is, as we wait for approval, are we running the program and providing the services in our community, or will we spend 2022 applying for the program, and then if approved, actually start providing services in 2023?
Okay, so that is a great question because it inevitably comes up, and it always does, and specifically it does because of the reason I mentioned before in the timing. So the window for, let's just take the 1 year, and even beyond the 1 year, our NPPs are broken into 5 or 6 or 7 1-year projects. Okay, but so when you do your timeline, that timeline is from July 1st till in December of the following year. It's really September of the following year. So it's, I think it's 15 months is what it ultimately is. You are eligible to start that activity on July 1st. So even if you didn't get approval, if you're going to be doing that, you can start that project as of July 1st. But there's one caveat. You haven't received approval. So there is risk because you don't know if you're going to get that specific, the tax credit money. So if you're doing something and you're funding it either way, right? If you're doing a after school program and it starts, in July, and if you're not looking for the next year to do it, and you want to do it this year, and you're going to do it either way, you might have to spend your own money as opposed to tax credits. Yeah, you might be willing to take that risk. But if you're doing a building project and this is the gap money that you need, then you can start, but you're doing it at your own risk.
Excellent. That's a great answer. So another asked, the only approval component for the businesses would be a commitment letter and compliance, correct? No special application?
That's correct. They are part of your application. So you are soliciting from them commitment letters. Ideally, what we want to see, and I can say that there was some discussion about getting rid of the solicitation plans. I was adamantly against it because I'm building this program, and I know as we do this, and I've worked with several organizations that they came in 1 year and they couldn't do it. And then next year they learned and they got it done, but they still needed that time. So the commitment letters and the solicitation plans are part of the application that you submit. You're going to get that from the business and you're going to put it in as an addendum and an attachment. And then during the solicitation period, if you don't have all your commitments when you submit your application, you'll send them into a resource account as you get them. And then we'll put them into the application after you've submitted the application. So it is an ongoing process, but they have no other requirements except to make that commitment and then go to the revenue website and make sure that they're in compliance. That's the only requirements of the business. One thing about a business that's very important that I have come up with a few times, and you can look and find out, there are corporations and certain medium-sized businesses in the Commonwealth that take advantage of the Delaware loophole. They're not status, even though they're a Pennsylvania company. Sheets is an example. Sheets is not a Pennsylvania company because they're statused in Delaware. So they cannot participate in this program. You have to be a Pennsylvania company and have Pennsylvania obligations. You don't have to have liability, as we said before, because you can transfer it. So you don't have to owe any taxes. But if you had a circumstance where you did owe taxes, they would be to the state of Pennsylvania. That's the criteria that you have to meet.
Excellent. So we're getting flooded with questions, so I'll just keep them
Perfect.
coming. How do smaller 501c3s fit into this program?
So really, it's about what you do, right? So if I mean, I don't know if there's a specific example of what you're talking about doing, but if you're out looking and you're a nonprofit and you have to raise money, if you fit into the eligibility of these, based on the guidelines for an NAP or an SPP, there's no low end requirement. You can get $1,000 or $5,000 from a business, and they'll get that 55 or 75% tax credit. So yeah, I mean, I guess the size is just going to be relative to the size of the project that you're dealing with, right? If you're a smaller nonprofit, you're probably looking at a smaller project. It's really just defining what it is you're going to do and whether it's eligible under the program. That is the critical question.
Excellent. We have about 4 more questions. We're coming close on time. Are you okay staying on for another minute?
I'm fine as long as you want. I'm good. So okay. I don't want to take anybody else's time, but I'm good.
So if anybody has to sign up, we'll continue recording this, so it'll be available, but I'd like to get to some of these questions since they are important. What is the level of competition for NAP? Do you know approximately what percentage of submitted applications are approved annually?
Well, I can say this. I could have said this until this year. I have had 100% of my projects approved. Now, that's not the case for the whole Commonwealth. As I mentioned earlier, it's underserved in the Northeast. So we have been very successful. We actually get extra credit points for just being in the Northeast because it's underutilized. But in the Southwest, they get 150 applications a year and they fund 25 to 30 projects. So yes, there is a lot of competition, but it's regional, and I'm trying to build that competition here. And I'll also tell you this, I don't like people to waste time. So I try and build projects in advance and really have a discussion, and I'll work with my program people in Harrisburg to ensure that we have a high probability of success. I only had one this year that wasn't funded, and I'm still upset that it wasn't funded. But and I'll have that conversation. I'll fight. I'll get them money. So I'm going to fight for you if I think the project is a good project and if it can be competitive. If I don't think it's going to be competitive, we'll either look at another channel or just, it might be the realization that this program isn't a perfect fit for what you're doing. But if you're a nonprofit, it generally is. And then it's just going to be about what are the priorities for that year? Is there a COVID issue still going on? What are we seeing as far as increases from the legislature about putting more money into the program? And they have been we just got doubled 2 years ago. We went from 18 million to 36 million in 2 years ago. And that's a testament. They don't put more money into programs anymore. DCED has been gutted of all our program dollars. This is one that's sort of bucked the trend. So there's a lot of opportunity.
Sounds like you're a great advocate for nonprofits here in this region, especially as it relates to this program, for sure.
For sure.
So a couple more. Would you be able to, or excuse me, let me see, where is it? I apologize.
I saw you said, is there a list of businesses?
Yeah.
I don't have a list per se, because we don't keep a list like that. We do. You can look at approved EITC companies that might give you an indication that those companies are interested in are familiar with the tax credit program. But unfortunately, we don't keep an active list because it's different than the EITC. With the EITC, you have to be an approved contributor beforehand, and then you decide where you want your money to go. Here, you're partnering with the applicant, the business, so they're sort of off to the side on each individual application. It's independent. So there is really no we don't have a list broken down like that.
Okay. In a similar
Now this-
vein, is
go
there
ahead.
an average donation amount or typical amount provided? By the
You know what I would say? I think just from my experience, I think $10,000. I see a lot of $10,000, $15,000 and $20,000 contributions. That seems to be a little bit of a sweet spot. Obviously, when we're dealing with the NPPs, that's different because it has to be at least 50. But in our NAP and SPPs, yeah, 10 to 20 is probably what we generally see.
Great.
And I see, I do see a question here as I pop this up. Lindsay had a question as well, as far as, is it possible to apply for more than one project in a year? And I mentioned Todd was on with us before. And Todd, I don't know if he's still here, but I think NeighborWorks had 4 applications in this year. So yes, you absolutely can. As many as you can find funders for, let's get them in. They broke them down into smaller ones, and every single one was funded. They're really great what they do over there. Jesse and Todd and the NeighborWorks crew, they're one of my favorite to work with because they know the program, they know how to do it, and they are a great resource. By the way, Todd, I don't want to throw you guys any more work, but if you don't mind, I'm sorry telling them that you guys are involved because they're a great resource if you have other questions about how they do things as well.
Yeah, and actually Todd he did say he had to hop off for a call, but he did say in here that they have utilized this program and they'd be happy to answer any questions that anyone has. And he provided his email address in the chat. Yes,
perfect.
EPOUSLEY@NWNEP.org. And if you, excuse me, NEPA.org. But please, feel free to reach out to Todd. And if anybody needs his contact information, we will do that. So it looks like there's a specific question from Ashley. I'm going to ask her, maybe to reach out to you directly since your information was shared about their particular organization. So I would.
Yeah, and I've worked with Ashley before, actually, on probably on the project she's talking about, so I can.
Perfect.
Talk to her for, yeah, no problem.
Excellent. Well, so grateful again to you, Paul, for giving of your time and letting us go about 5 minutes over to answer questions. This is a really excellent program, and I really hope our nonprofits are able to take advantage of this program and infuse some more dollars into our region in this way. So thank you so much for your time, and thank you everyone for joining us today. Again, this has been recorded and we will get it posted up on our YouTube page and share it out to our friends. So thank you again, Paul.
Oh, you're very welcome. Thanks for having me, Maggie and Crystal and Dave. Thank you for your participation. Really appreciate it.
Thank you.
And Maggie, I'm gonna send you our most recent set of guidelines as well.
Perfect.
I don't know if you have the ability to put them in with the recording and as an attachment, but they'd be there for anybody, or just you can go to our website.
That's perfect. I'll figure out a way. We'll get that included.
Wonderful. Thank you so much.
Thank you. I hope you have a great day.
Everyone.
Thanks.
Take
Take
care,
care.
everyone.
Take care. Bye-bye.